Hi traders, it's Alberto, and today's video will focus on how to trade the markets during October and January, which normally is the height of the holiday season, and usually retail sales are up. For example, Thanksgiving and Christmas, retail sales normally go up, which means there are more jobs, so non-farm payroll numbers go up. So that means the US dollar appreciates against other currency pairs. So looking at this chart, notice that October 13th, the market found a resistance and just sold off from there. So the US dollar against the euro has been going up for the past almost two months, October and November. And normally this phenomenon continues through January. So we'll go back in history to see how that occurs. And the way I like to trade this is just wait either for a color change candle on a daily chart or an entry on a 1-hour chart, and using a Bollinger Band take advantage of the entries, either trading below the central moving average line and having a confluence of indicators. So if you notice that price breaks below the central moving average line on this Bollinger Band on the daily, 1-hour, and 4-hour chart, then you have a good trade. And now it's finding support because it's a lower band. So we're going to start looking for rallies to sell on the euro dollar. Remember, between anywhere from October through January, the US dollar usually appreciates, and that's reflective in the charts. It's easy to trade if you know your candlestick patterns. And all you need to do, anytime there's a rally, start looking to short. It was a good trade. Here there's another trade. So anytime the market rallies the euro dollar, there's an opportunity to short during this period of time. Let's go back to October 2014, and here it is again. Anticipating right before the holiday season, the euro dollar started to weaken and the US dollar started to get stronger. And from October 14th all the way to January 22nd, the market just completely sold off. Not very much of a retracement. It just kept selling off and then retraced in January, but continued to sell off. The euro was very weak in 2014. Okay, there's always other factors that can contribute to this phenomenon, but the holiday season is a really sure thing simply because the numbers, fundamentally the US numbers, are strong, and that makes the US dollar stronger. The stock market goes up, and it's a great window of opportunity to take advantage and make some decent profits during this time. Here's October 20th, the market sold off. Notice that it retraced, but never went up higher than the October swing high, and then sold off on January 30th. It was finished, and notice the market just from January 30th, it turned around and went north. Okay, here's October 13th, the same thing. Prior to the holiday season, traders are positioning themselves. If they were long, now they exit their positions and price is starting to sell off. And again, market sold off. It retraced, but then here again, November 13th is when price bottomed out before it turned around and went north. Okay. And October 26, 2011, and here again was a perfect sell-off. A 3-month 2.5 months, or mostly just 2 months, November, December, and first week of January. And then from January, notice the market turned around and headed north. 2010, same thing, around October 25th, sold off. Bit of a retracement, but by January 10th, this was pretty much over, and then turned around and went north. And here's October 25th, 2009, and the euro did a complete turnaround. If we place our channel indicator, the market was in an uptrend, completely overbought, this took advantage excuse me, of the holiday season, and this trend channel completely was breached and then turned around and headed south, even past. Here's January 7th, a bit of a retracement in January, and then but just kept on selling off then. September 8th, the sell-off started early and ended around November 19th. Rallied, but before Christmas, the market sold off. And here's January 29th, and the market found support. Didn't find support till March, but still the same thing. You could just extend this area. So if you enter the market up here, you could have easily stayed in through January. Okay. Of course, hindsight is easy, but what we do is trade on. We know during this period of time that we should be selling the euro dollar. So we make sure we place a trade below this moving average line on this Bollinger Band system. And we can do this on the 1 hour, 4 hour, and daily chart. Okay. November 2007, market sold off, found support, but came back down. In January, it ended lower, or rather the same area. So from November 22nd all the way down to January 22nd, the market was in a downtrend. Now I could continue to show you more examples, but you get the idea that, and it's very simple, it's just taking advantage of this period of time that usually the US dollar is in an uptrend. And that's what's occurring right now. And let's look at the pound dollar. Oops, that's not the pound dollar. Here's the pound dollar. Same thing's happening on the pound dollar. Nice sell-off. See, here we go back in. Started September 17th. And here is December 2nd. And the market's just been in a downtrend for the past three months. That's it for this tutorial. If you have any questions, please email me. Have a good holiday, and thanks for watching the video.